All right, welcome to The Explainer. Have you ever really thought about what goes into a home loan? I mean, it's way more than just your credit score. Today, we are pulling back the curtain on the whole shebang, from decisions made in Washington, D.C., all the way down to that incredible moment you get the keys to your brand new home.
You know, buying a home is such a huge milestone. It's a cornerstone of the American dream for so many of us. But let's be real, when you're staring up at that dream, the whole financing process can feel, well, completely overwhelming. And that's because behind every single front door, there's this invisible machinery of finance and law and national economics, all spinning together just to make that one purchase possible. So, to figure all this out, we're going to follow the journey of a single home buyer. We're going to connect the dots from the big picture economics right down to what's in their wallet, and we'll see how the rules are actually designed to protect them every single step of the way. Let's start at the very, very top. Okay, so long before our buyer even starts scrolling through home listings online, these major economic forces are already at work, and they have a huge impact on the single most important number in any home loan, that interest rate. So think of it like this. The government has two main levers it can pull to steer the economy. First, you've got fiscal policy. That's Congress and the president deciding how to spend money and set taxes. And then you have monetary policy. This is run by the Federal Reserve, the Fed, which basically acts like the economy's thermostat, controlling the flow of money to heat things up or cool them down. So how does the Fed actually turn that dial? Well, one of its most powerful tools is selling government securities to banks. When it does that, it's basically soaking up cash from the entire system. And with less money available for banks to lend out, borrowing becomes more expensive, and yep, that includes mortgages. And that's what's so wild. A high-level decision made in a boardroom in Washington, D.C. can directly change the monthly payment on a house right in your neighborhood. Okay, now, as our buyer starts shopping for a loan, they're not walking into the Wild West. Not at all. There's a whole framework of laws specifically designed to make sure the game is played fairly and that everyone gets a legitimate shot. Just think of these laws as a four-part shield that protects the borrower. The Fair Housing and Equal Credit Opportunity Acts are your frontline defense, making it absolutely illegal to be denied a loan because of who you are, your race, your religion, your sex, or age. And then behind that, the CRA and HMDA act like this powerful backstop. They push banks to invest in all the neighborhoods they serve, and they force them to report lending data, so regulators can actually hunt for and stamp out discrimination. And a huge target of these laws was ending the destructive and totally illegal practice of redlining. This was where lenders would literally draw a red line on a map around certain neighborhoods, often minority communities, and just refuse to lend there, no matter how creditworthy an individual applicant was. These laws make that practice unequivocally illegal. And they're approved. Our buyer found their home, they've secured the financing, but now comes maybe the most critical moment of all, signing the documents that turn this whole dream into a legally binding reality. The entire system of modern home loans is built on this really clever idea called hypothecation. It sounds complicated, but it's simple and incredibly powerful. You pledge your house as collateral for the loan, but you still get to live in it. It's kind of the magic ingredient that lets you own a home without needing to have hundreds of thousands of dollars in cash just sitting around. So at the closing table, there are two documents that do all the heavy lifting. First, there's the promissory note. That's your IOU. It's your personal, written promise to pay the money back. The second is the deed of trust. Now that's the security. It's what physically links your promise to the actual property, and it gives the lender the right to foreclose if that promise is ever broken. And if you were to look inside that note, you'd see the core of the entire deal. It's all right there, in black and white. The borrower's promise, exactly how much is owed, the interest rate, and the full payment schedule. This isn't just a piece of paper. It's the legally binding foundation of the entire purchase. So what does this gauntlet actually look like in real life? Getting from an accepted offer to holding those keys involves a very specific step-by-step process designed to make sure everything is completely buttoned up for both you and the lender. Well, it starts with pre-approval, where a lender gives you a really clear idea of your actual budget. Then comes underwriting, and that's a deep, deep dive into your financial life to verify you can handle the loan. A super crucial step is reviewing the official disclosure forms, and it all culminates right there at the closing, where the final papers are signed and you officially take ownership. You know, thanks to a set of rules known as TILA RESPA, that dreaded last-minute surprise at the closing table is pretty much a thing of the past. By law, lenders have to give you a loan estimate early on, showing all the projected costs. Then,
And this is key. At least 3 business days before you sign, you get the final closing disclosure. This is your power move. It gives you time to compare the estimate to the final numbers and call out any unexpected fees before you're on the hook. Now, the financing system isn't a one-size-fits-all model. It also provides specialized, really beneficial paths for certain groups. And a prime example of this is the loan program offered to military veterans and service members. One of the absolute most powerful benefits of a VA guaranteed loan is this number right here, 0. That's the typical down payment required. For so many people, saving up a 10 or 20% down payment is the single biggest hurdle to buying a home, and this program just completely removes it. And when you put them side by side, the advantages are just crystal clear. Beyond the 0 down option, VA loans don't require costly monthly mortgage insurance, which is a huge expense on conventional loans with low down payments. They've also got other flexible features, like no penalty for paying the loan off early. It's a fantastic deal. Now, these incredible benefits don't mean it's a total free-for-all. Of course not. The VA still has underwriting standards to make sure the loan is a responsible choice for the veteran. A key metric is their debt-to-income ratio, which generally needs to stay at or below 41%. It's really the perfect example of how the system balances amazing opportunity with smart, responsible requirements. But what happens if, down the road, our buyer faces severe financial hardship and just can't make their payments? Well, the system has a very clear, legally defined, and frankly, very serious process for what happens in a default. This is typically what a foreclosure timeline looks like. Once a payment is missed and a default occurs, a public notice gets filed. The homeowner then gets a window of time, usually about 90 days, to make things right. But if they can't, a notice of sale goes out and the home is sold at a public auction. It's a very sobering, very structured process that shows you just how serious that promise, the one made in the promissory note, really is. This quote just really gets to the heart of it all. The physical house, the bricks and mortar, that's just one part of the equation. Understanding the financial system that supports the entire real estate market is just as critical, not just for buying, but for the long-term value of your investment. So from the Fed's interest rate decisions all the way down to the fine print you sign at closing, the path to owning a home is definitely a complex one. But it's not random. It's a system built on rules, on protections, and on very clear principles. And when you understand how it all works, it's no longer a maze. It's a path that you can navigate with confidence.